Hi there, and welcome back to another exciting episode of Finance Success. Today, I'm going to be telling you why the markets have not tanked yet. So, without further ado, let's get into it. Now, you've seen the markets, and even though conditions are worsening, the markets are on an absolute tear lately. They're actually up and hitting all-time highs before the pandemic even hit. So, especially if you look at the NASDAQ, which has performed absolutely nuts, especially if you took it to the other day, since the pandemic. And this is leading a lot of people to believe that the markets are just going to keep going up, and the only way they could go is up. And not only just Wall Street bets, which is notorious for having a bunch of idiots, but just people in the market in general. I know I told my friends that the markets are going to tank, and I got a message the other day, which is why I'm making this video of why haven't they tanked, John? You said they'd tank by now. And that's what I'm going to be going over. So when looking at this, you have to look at the facts. You look at the facts, we're still having an awful global pandemic, and things are not changing in the US at all. We're still seeing a bunch of cases on the increase. No sign of really a vaccine yet, and when that comes out, who knows how much that is going to help us. We see unemployment continuing to rise every single week, and we have more than 29 million Americans unemployed right now. So it's just crazy, and it's keep rising. It hasn't gotten better at all. And then you see things like the Federal Reserve, Jerome Powell, saying that they're trying to aim for above 2% inflation rate. And what else? You could also see that Jerome Powell saying it's unsustainable. Our US debt right now has crossed 26 trillion. And at the rate we're going, it's completely unsustainable. And we're not even going to be able to pay off the debt. We're not even going to be able to pay off the interest on our debt. Just crazy. When you look at it, and you could look at it live, and it's going up. Since this, it's already gone up another $700 billion. Keep that in mind. You look at how much the U.S. Federal Reserve or whatever, their tax revenue, nowhere near our national debt. And nothing has gotten better since then. You see things like cheap money with our federal funds rate at 0.25%. And there's really no place it could go. And the Fed has even said, this was recently, that they're just going to keep it at low rates for a long time. And you have to keep in mind, there's nothing more they could really do except go up. And if they go up, it hurts the economy even more. You look at what the average was for the interest rates, and we're hitting record lows. All they have to do is go up from here. And so they're just going to keep this cheap money rolling out for the next coming years until we could get over this hump and get over the pandemic completely. And when you look at the inflation, when they're saying we're going to go for above 2%, this is why many assets, like the stock market, real estate, are just skyrocketing. It's because people want to get their money in an inflation-resistant hedge, and they're putting it into things like the stocks. And this is why you see absolute parabolic runs for things like Tesla, which just keep going up for some reason. It doesn't make any sense. It hit $2,500 a share. Keep in mind, there was a stock split of 5-1. So before this was $2,500 per share. And everything's just getting over-exhausted. The markets are completely overvalued. And people keep thinking it's going to keep going up. So they keep putting more and more money in, trying to FOMO in. Because they're afraid they're going to miss out on all this money. Because if you look at it, they have. If people just invested when everyone was saying it's going to get worse, they would have made 54% ROI in like 5 to 6 months. It's absolutely crazy. And you also got to remember that right around the corner is the election. So things are going to get really unstable from here on out. I will tell you that much. And they already are. You see the cracks coming through. It's already almost 4% down in a single day. We're headed towards really unsustainable markets and really volatile times. And this is most likely when I'm going to see it. But now I want to bring up my next point. Sure, you could look at the signs, the warning signs, and you could see where we're headed is just not good. And there is probably going to be a crash. But you can't tell when. It's really hard to predict. So now I'm going to be bringing up Michael Burry. If you don't know him, watch The Big Short. It's a really good movie. He basically bet against the housing market during the 2008 recession. He predicted it all. And it was unheard of at the time. And everyone thought he was insane for it because he was going against the herd. Everyone kept saying it would keep going up. And he knew this stuff was unsustainable. He saw the cracks and he took out a short position against the housing market, which means he bet against the whole market, which has never historically really gone down in a dramatic way. So now I'm just going to play a short little clip.
Poor people. I just know how to read numbers.
How big's your short position right now?
1.3 billion.
And the premiums?
Well, we pay roughly 80 to 90 million each year, which is high, but I was the first to do this trade. Watch, it will pay. I may have been early, but I'm not wrong.
It's the same thing. It's the same thing, Mike.
You're managing a fund of, what, 555 million? In 6 years, it'll all be gone. On one bet.
The second quarter of 07 is when the adjustable rates kick in and the defaults will skyrocket.
Yeah, says you.
How much is eligible for withdrawal before they do?
And he was wrong in his prediction. He did not time it right. He was off by, I think, like 6 months. And this guy was paying insanely high premiums. And investors were pulling out left and right. And he knew. He saw the cracks. And he knew what was going to happen. He just couldn't time it right. And that's where I'm getting at. Because what happened next was this.
It's Dr. Burry. Looks like the collapse of the financial sector is imminent. I start to sell my position. It's 1.3 billion. Sure, I'll hold.
This is when he was getting out. He saw the cracks and he acted on it. He went against the herd, and although he was wrong on his prediction of the time, he knew where the market was heading. So when I say, and when people say out there the market's going to crash, there's a pretty high certainty that it will crash, and it's going to tumble even more. This market that we're in is unsustainable. Powell is saying it himself. The cracks are all around you. You just got to look. And with the election right around the corner, we're going to see some very choppy, volatile times. And who knows, we might keep going up, but we might go completely down. So now you might be thinking, well, if we're in an overvalued system, then why don't we just short it? Why don't we do what Michael Burry did and just short the whole market? The problem is, you could buy puts out there, but the people that did that when right here in March, they thought it was going to keep going down, and they got absolutely destroyed. Not because things have gotten better, but because the Federal Reserve is printing like no tomorrow. They're keeping these asset prices artificially high. They're not supposed to be this high, but they're basically forcing it to be this way. So you should get out while you still have a chance. Sell now. And if I were you, what you could do right now, the best thing to do is to do what Robert Kiyosaki says. It's the death of the dollar. People are desperate for money. Very sad. If the government gives you free money, take it, yet spend it wisely. Do not save. Because if you save, you just saw what happened. The people that were saving weren't making this money. It's easy money. You just got to know where to put it. Don't save. Your dollar is getting inflated away really quickly. So what should you do? You should buy gold. You should buy silver. And you should buy Bitcoin. I know I've been preaching it, but I can't preach it enough. This stuff is going to be worth so much along with gold and silver. You have to get out. You have to look at the warning signs. And although the market hasn't crashed yet, it most likely will. I can't say when exactly, but I can say it's going to crash and it's going to be worse. So you could either be like the herd and keep investing in it and keep buying Tesla until it hits freaking $1,000 a share. People are probably going to try and make this thing double again because they're making crazy amounts of money because everyone just keeps piling in the cash and asset prices just keep rising. The Federal Reserve is getting you a chance to get out of the markets. Get out now. Keep some cash on the sidelines for when it does crash. And I would keep a majority of your money into hard assets like gold, silver, and Bitcoin. And so with that, this is going to conclude the video. I hope you found it informative. I hope you like it. Please subscribe, like it, and please, I desperately need video ideas. So comment down below what the next video I should do is, because I am running out of things to talk about, and I want to keep this going because we're starting to get more traction on the channel. So I'm going to see how long it goes. I'm probably going to move my videos from Tuesday and Thursday to possibly Tuesday and Friday. So I'm just going to let you guys know that now. But thank you and have a great day.